In a shocking turn of events, the American agricultural sector faced its biggest crisis in decades. Family farms, once the backbone of America's heartland, were crumbling under mounting debt. These farmers had bet big on China's endless appetite for American crops, but when Beijing suddenly shifted its trade policies, their dreams turned into nightmares. The ripple effects were devastating. Agricultural giants like Cargill and Archer Daniels Midland watched helplessly as their revenues plummeted. Warehouses overflowed with unsold grain, while trucks and trains that once carried America's bounty to Chinese ports stood idle. The entire supply chain, from small-town farmers to multinational corporations, was bleeding money. But this wasn't just about short-term profits. China was playing a longer, more strategic game. Beijing was systematically reducing its dependence on American agriculture, forming new partnerships with countries like Brazil, Russia, and Canada. This wasn't merely retaliation against U.S. tariffs, it was a calculated move to reshape global trade patterns. The technology sector wasn't spared either. American tech giants that had spent years cultivating Chinese partnerships found themselves increasingly frozen out. Companies like Google, Tesla, and Intel watched as their market share evaporated, replaced by homegrown Chinese alternatives. Beijing's message was clear: China would no longer be America's customer. Canada emerged as a surprising beneficiary of this economic upheaval. With its vast natural resources and advanced industrial sector, Canadian businesses quickly stepped in to fill the void left by American suppliers. The shift was dramatic. Canadian exports to China soared while U.S. trade numbers continued to decline. Then came Trump's controversial statement at Mar-a-Lago in December 2024, suggesting Canada could become the 51st state. The backlash was immediate and fierce. Canadian Prime Minister Justin Trudeau's response wasn't just diplomatic, it was a declaration of economic independence. Canadian consumers launched boycotts of American products, while businesses actively sought non-U.S. suppliers. The impact on American tourism was particularly severe. Florida, California, and Texas, which had long depended on Canadian visitors, saw their tourism revenues plummet. Even the bourbon industry, a proud American export, suffered as Canadian stores pulled U.S. spirits from their shelves. But the real game-changer came when Canada proposed a 100% tariff on Tesla vehicles. This wasn't just about cars. It was a direct challenge to American technological and industrial dominance. A Tesla Model 3 that once cost $40,000 would suddenly cost $80,000, effectively pricing it out of the Canadian market. European automakers seized this opportunity, flooding the Canadian market with their electric vehicles. The implications stretched far beyond Tesla's bottom line. It signaled a fundamental shift in North American economic relations. The U.S.-Canada automotive industry, worth over $50 billion annually, faced unprecedented disruption. As 2025 unfolds, the question isn't whether America's economic dominance will decline, but how fast and how far. China continues to strengthen its ties with BRICS nations, while Canada deepens its relationships with European partners. The U.S. finds itself increasingly isolated, watching as global trade patterns shift away from American influence. This isn't just about trade wars anymore. It's about the future of global economic power. Unless Washington changes course, the America-centric world order that has existed since World War II may be coming to an end. The choices made in the coming months will determine whether the United States can maintain its economic leadership or if we're witnessing the beginning of a new economic era, one where American dominance is no longer guaranteed.